ครับ
Hello, good afternoon, investors and corporate. Welcome to Set Digital Roadshow Year-End 2023 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investor may leave your question in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite PTT Global Chemical Public Company Limited to start the presentation. Thank you very much.
Thank you very much, Stock Exchange of Thailand, for arranging this Set Digital Roadshow for us. So for today's presentation, we'd like to go through three key areas. The first one would be on the strategic execution and also on the market outlook. But just before going into that, maybe just a brief recap on the business outlook. I think most of you already know about us, GC, as we are the main integrated petrochemical and petroleum producer here in Thailand. And total now we have capacity of 14 million ton. And we have been recognized by the DJSI for 11 consecutive years, which show that we have strong commitment to the ESG and also in terms of our net zero commitment as well. And that's the last point. You know that we acquired Alnex back in 2001, which is our major step toward the performance chemical, which is our aim to try to enhance our portfolio to have around 30 to 35% contribution from the performance chemical in the long term in the next 10 years. So we made that major move back in 2 years ago, and now we have progressed along in terms of the growth toward this target that we have. Next is the strategic execution update. So in the next page, we would go into the section on the strategic execution. We can go into the next page. So in this section, we like to give a brief summary on the highlight of the execution of our strategy in the past year, which we have grouped into 4 main areas you can see here. All of these things that we have done have helped to strengthen in terms of our resilience and also our ability to generate stability in terms of the margin and also to be able to go through this downturn in the petrochemical cycle, as we all know. So these 4 key areas are operation optimization. The second one is integration and partnership. And the third one is leadership in ESG. And the fourth one is the financial. So for the first one, in the next page, will be about our operation optimization. So on this page, we would like to highlight to you about the things that we have done in order to help enhance our ability to use different kind of feedstock in terms of our production. So get the next page. So I think olefin would be the main one that can show to you our ability to use feedstock. So as you know that in the past, our main baseload feedstock is using ethane, which help us to have the ability to compete with the other producer and also have a better margin over them. But over the past 3 to 4 years, we've been trying to enhance our ability to use more liquid base into our olefin cracker. So we have completed 2 main projects, which are the olefin reconfiguration project. This one is the naphtha cracker expansion. And the latest is the OMP, which is the olefin modification project that will help one of our cracker to be able to use more propane as the feedstock. So ultimately, now you can see that we have in total of 3.7 million ton of olefin capacity. And in terms of the feedstock intake that we have, which is shown on the right-hand side, you can see that beside the base load of the ethane that we have at the bottom in the dark blue one, now we have more ability to use the liquid-based feedstock, which can be switched around between the LPG, propane, and naphtha. So we can take advantage at the right timing to use which kind of feedstock based on that market condition, which will help to generate the best margin for us at that market condition. In the next page, this one will be on the second area, which is the integration and partnership. So during this past 2 years, we've been besides doing the business ourselves, we also try to integrate and develop new partnership that will help in terms of conducting our business. So this is the latest key example that we have done in the end of 2023, which we completed the transaction that bring in WHA as the partnership in one of our subsidiary company, which is GC Logistics. So previously we owned 100% in GC Logistics, and last year we decided to bring in WHA, who is the leader in the warehousing and logistics business in Thailand. So they can help us come in to develop and further enhance this business. And also at the same time, it will help us to have the enhancement to our balance sheet as well, because we able to generate the cash inflow from this transaction of around 2.6 billion Thai baht. So this is also in line with our plan at the moment, which we try to focus on deleveraging and also trying to enhance and improve our balance sheet position so that we can have the strength and resiliency to go through this downturn. In the next page, the third area, this one we will focus on the other area of the integration, which is the things that we have done with Allnex over the last year. Which you can see that after we have acquired Allnex, we try to enhance and support them in terms of their growth in key markets. So one key market obviously for them is in China, right? And as you can see on the bottom part of the page, that around middle of last year, Allnex completed the construction of their new China hub, which is located in the area called Dushan Port in China. So this new facility will help Allnex to have increased capacity to produce coating resin in China and able to produce at a more cost efficient, because this new plant is located within the area where they can be able to secure feedstock at the competitive price, and also be able to connect to their customer who are mostly located nearby to their plant as well. So this plant will be a strong piece of their long-term growth in China. So this is something that we try to support them. And beside that, we also try to enhance the collaboration that we have between GC and Allnex. So there are two key areas that we show on this page here. The first one is on the innovation and R&D, which we provide to them the facility. The examples you can see on the picture here is our facility in Rayong of Thailand, where we develop this into the innovation hub, where both GC and Allnex can collaborate and come up with new technology and new product for our customer. And on the right-hand side, you can see also that we try to help support them in terms of the cost and operation optimization as well. So we provided 4 experts to Allnex to go in and help to look at how to improve the reliability and safety performance of Allnex, which is something that GC have the expertise in and can support to them. So on the next page, we looking at the third area, which is the ESG leadership. So you can see that in the long term, we have the net zero target that we have announced that we will try to reach net zero carbon footprint by the year 2050. And in the interim, we have the target of 20% reduction by the year 2030. So these will be completed in 3 key elements of area, as you can see here, which are efficiency-driven, performance-driven, portfolio-driven, and the last one is the compensation-driven. So the first area of focus that we have and already started and already showing some result is the efficiency-driven, whereby we try to look at our facility and how to reduce the carbon emission coming out of our plant by using more clean and more renewable energy for the power production, and also try to reduce the waste in our production process. So these have already produced results, as you can see in 2023, reduction of carbon by around 138,000 tons of carbon, and I think we are on track to achieve the target that we have of around 500,000 tons of carbon reduction by the year 2030. The next area, the blue one, is the portfolio-driven, whereby we try to restructure our business to have more investment in the low carbon and more focus on the recycle and bio-based product. Where you can see we invest in companies like Enrico, which is the recycle plastic company, and also our Next as well, where they have less carbon footprint than the basic chemical product. All these efforts that we have done help us to avoid the carbon emission. And in the next medium term to long term, we continue to study the restructuring of our business to maybe look at how to enhance more of the low carbon business into the portfolio and also have less of the high carbon business. Last one on the right hand side, compensation driven. This will be more in the longer term, maybe after 2030, where we'll try to use more of the upcoming technology like the carbon capture and utilization, which we are now studying with both our PTT group and also outside the group as well, where we are working with partners in the US as well. So this will be something that will help fill in the gap in the longer term. The last one that I'd like to highlight for today on the fourth area, this one will be mainly focusing on the financial initiative that we have done in the last year. As you know that our focus over the last year has been trying to improve our balance sheet position, because obviously in the current downturn, we do have some pressure in terms of the lower EBITDA contribution, while at the same time we do have debt level, which was incurred after we acquired our Next. So we're trying to make sure that our leverage position is improved so that we can be in line with the credit rating of the investment grade rating, and also make sure that we have the financial strength in order to go through this current downturn. So on this page, we have summarized for you the execution that we have done in order to deliver our balance sheet position. These are things that we try to do in order to bring in cash and also use that to repay or retire some of the debt that we have. So starting from improving our working capital, such as trying to expedite some of the receivable from the tax that we owe by the revenue department, or also continuing to use the extended credit term that we have with PTT, our parent company. So those continue to help to improve the working capital position for us in 2023. And besides that, we did do some additional initiative as well that helped to bring in some additional cash. The monetization of TC Logistics, as I already mentioned, helped to bring in around 2.6 billion Thai baht. And besides that, we look at our asset and see which one we can try to monetize as well. So we did do some sell and lease back of our precious metal. These are like the metal that is used in the production process, which previously we carry on our balance sheet, but we look at it and we decide to sell that to some financial institution and then lease it back so that we free up some cash. And then from all that, we started to retire some of the debt that we have. So we completed buying back the US dollar bond last year, in total around 355 million US dollar, which is actually quite a good transaction for us because last year was quite a good time for us to do this transaction, where last year was the high interest rate in the market. So it presented to us an opportunity to buy back the bond at the lower cost and also help to generate the one-time gain for us. And lastly, we also did engage Fitch Rating as the international rating agency, as the third credit rating agency as well, in addition to S&P and Moody, who continue to be the rating agency for us. So Fitch come in and provide a third credit rating view, and they provided to us the rating of BBB with the negative outlook. So from all these initiatives that we've done, we think we are quite confident that we should be able to continue to maintain our investment grade credit rating through this downturn cycle. Besides that, we continue to do the financial discipline as well, such as OPEX and CAPEX saving, and also all the enhancement initiative. So from all these initiatives that we have, you can see on the right-hand side the benefit that it provided to us, both in terms of the balance sheet position, which we were able to reduce debt ahead of schedule by around 10 billion Thai baht. And then on the P&L, you can see that we also have some gain on that as well from all these transactions, which help to benefit into our P&L of around 9 billion Thai baht. And also, lastly, this also help us to maintain the return to shareholder that we able to do. So last year we announced the full year dividend of 0.75 baht per share, which equivalent to around 2% dividend yield. Okay, and I think this is just to conclude for the strategic part, the outlook that we have for 2024, in that we see that the market condition for 2024 will continue to be difficult, with the pressure from the industry demand supply situation, where the supply that has been built up will still continue to need some time for that to be absorbed. And with the current market outlook for the economic recovery, will still be quite a gradual or slow recovery in this year. So that's why we think that the recovery outlook for this year will still be slow or in the gradual recovery mode. So for us, GC, we have to try to continue to be careful in terms of how we be careful and cautious in terms of our plan for this year. However, we think that the broad strategy that we have executed, which is under the pillars of the 3-step plus strategy, including the step change, step out, and step up, have been on the right track, and will continue to enhance on this strategy, right? Where on the step change, we will continue to look at enhancement our competitiveness, and also try to look at how to enhance the value of our end product by working more closely with customer in order to have more product that we call the HVP product. The step out, this one we continue to work with our next on that growth project and cost initiative, and also expansion on those recycling and bio-based product that we already have in our portfolio. And lastly, the step up based on those target for the carbon reduction that I already went through. We continue to go on that track. And lastly, on the right-hand side, you can see that we will continue to look at other opportunity that will help us to go through this down cycle. So those could be bringing in more strategic partner or looking at how to monetize our non-core business as we have started to do last year. And also other area of enhancements like the hydrogen and carbon business integration as well. So next, I think we will go into the market outlook part, which I will hand over to Kun Sanjila.
For the market outlook part, as you can see from the first slide, for the crude balance is still the supply is still over the demand, and geopolitical tension in the Middle East in the Middle East still exists throughout this year, and while the tightened oil supply from OPEC still be along this year. So we forecast that the Dubai price in this year should be flat or over flat around 80 to 85 barrels in this year. And as well as for the naphtha side, the weak of the downstream demand still exists in the first half of 2024, and we will see the gradual improvement in the latter of this year. So the naphtha price will go up along with the downstream demand price. And if you look at the bottom of the global refined product demand, you can see that all the petroleum products has been over the COVID level. If you compare the demand, the percentage of the demand with the COVID level, and as well as jet demand, you can see that the jet demand is forecasted to go up to the pre-COVID level in the fourth quarter of this year. This is supported by the inbound and the outbound of the more long haul trips around the world. Next slide, please. And for this slide, I will tell you about the end-use market outlook of each segment. First is about the automotive segment. We expected that the EV car sale will be increased up to 21% this year. This is supported by the OEM business of the EV car has been growth throughout 2024, and the automotive sector continues to improve the demand of the EV car. Next is the textile segment. The textile segment is quite steady to the last year, but we can see the seasonal improvement during the first quarter this year, as the more demand has been come from in China, that they have more demand ahead from the summer season that pick up in China, that pick up mainly in China lately in this year. So the textile market is we forecast is steady to last year, because they're still challenging from the economic concern. Next is about the packaging and film. As this segment will belongs to the products such as PE and PP and PET. Right now we have some trend of buying behavior from the customers that from the summer seasons and the more heat wave, that will support the more of use of the packagings in the summer seasons. So we expect that the more buyers from using the PET bottle will be increased during this season, the summer season. So the packaging market, we will see that it continue to improve from the previous year. And lastly, it's about the construction in household and pipe. For this segment, the construction still varies from China real estate issue, and with a high interest rate in this year. So we have to monitor the demand will be pick up or not in this year. But the main supporter will be in the emerging countries such as in India and in China. That's especially India that has been has been supported by the government infrastructure projects. So we will monitor if the product such as the phenol PE in relation to the construction segment will be growth in these emerging countries. Next is about the international business slide. All right, for the international business outlook, this slide is telling you about the Onyx outlook. We expect that the partial volume will rebound in the second half of 2024, driven by the demand recovery in the key market segments and support by growth in the key regions. And this slide is telling you about the outlook of the first quarter of 2024, which we forecast the positive area in auto and mobility and packaging. This will have some improvement in the first quarter. In the first quarter. But the rest, such as industrial goods and construction, is still flat compared with the fourth quarter. For the auto and mobility, as I said earlier, is supported by the OEM demand in all regions from the new model and new Chinese player that has been more buyers in early 2024. And for the industrial goods, meanwhile, the constraint between the Red Sea has been exited during the beginning of this year. There's been a good news for Onyx that the demand surge for container, the demand surge for coating container because of the lack of the containers shipping. They had to produce more. The consumer had to produce more containers, so there will be the more use of the coating containers. And for the packaging, as I said earlier, there's been some pickup in demand during the summer season. So this would help the more demand in the packaging segment. All right, that's all for the market outlook part.
The section has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much. ขอบคุณค่ะท่านผู้บริหาร